Okay, let's go ahead and get started. And thank you for coming. Thank you for spending part of your afternoon with us. I know during the weekday we all have a lot of other things to do. So I'm going to get right to the point. I'm not going to drag this out. We're going to kind of hit some high spots today. This is backwards from how we usually do it. I will typically do an event where I try to explain the entire system and what it's all about and how it works and why it works and how we came up with it and what are the indicators that we're using and all of that. And then as a follow-up, a couple of days later, I'm going to go and do a session where I teach people how to trade what we trade. This is a little different. I'm going to do this the opposite this time because we lose a lot of people on that first day a lot of times. We have people that they're really only interested in learning how we trade. They don't really care that much about all of the details behind how we got there. So you may have noticed in your email, there's two kinds of people, or there's two kinds of traders, and we'll talk about that in just a minute. But first, give you the typical disclaimer that there's substantial risk in trading, that most people will lose a lot of money, and the odds are you will too. So only use discretionary funds that you can afford to lose. If you decide to trade with real money, we recommend that you never trade with real money until you've worked at your trading for a very long time. And even then, be very careful with your discretionary funds and make sure you know what you're doing, because there's a high likelihood of losing that money. Okay, so I have to do that. And this is for educational purposes only. Okay, so there's two different kinds of people in this world. There are people that want to know everything there is to know about a car before they buy one, right? They want to know about the brakes. They want to know about the engine, the electrical system, the cooling system, the suspension, transmission, wheels, gear rate. It goes on and on and on and on. There are lots of those types of people before they buy a car that's what they need to know, and that's what they need to learn about. Right? And then there's another type of person. And if you're that other type of person, today's the day for you. Okay? So we've got the people that need to know how this works before they'll believe in it, or they want proof. They want all the inner workings to understand it. And that's going to be Saturday. Then there's the people that say, I don't care how it works as long as it gets the job done. That's today. Okay? So I'm comparing this to, if somebody asks somebody, how does a car work? And their answer might be, they might give you this long drawn out explanation of how an internal combustion engine works. And then if you ask my wife, how does a car work? She's going to say, well, I have car keys and I put gasoline in it. And that's how a car works. Neither is wrong. It depends on what you need to know to use that tool to get the results that you want. So a lot of people only want to know the minimum basics required to operate a car. So today we're going to talk to those people that really don't care. You're not interested in how a Ferrari is built? Great. Maybe today's for you. On Saturday, we're going to go into more detail for those of you that do need to know those things. All right, so I'm not going to sit here and bore you with a bunch of details. That's Saturday. Okay, so this time we're doing it backwards. We're going to we're just going to show you how to trade our system and what we trade. Saturday we'll show you how and why. Okay, fair enough? All right, here's a quick shot of what we're looking at when we trade. Okay. This is what we see day in and day out, over and over and over again. And it's repeatable. And we've got indicators on the chart to tell us not just when to take a trade, but to tell us that a trade is potentially setting up. Okay. So you'll hear me in the trade room say, and all I'm saying is I'm watching, and then I'll tell you what instrument. Okay. I'm watching the ES. And that's just to let you know I'm seeing some of these step-by-step processes that we use to our qualifying a trade setup. And we're going to show you those in a little bit. But right here is one basic trade setup that we trade all the time. In fact, the traders that trade with us every day look at this and kind of start getting excited and start salivating because it works so well. Every time we see this particular setup, we're just like, oh yeah, I got to get in this because this is going to be a winning trade. All right. So let me show you what we see here. First thing we see that price has been kind of channeling for a while, for several bars. Not much has been going on. Price is kind of drifting around, and there's not too much interest going on, and it's easy to get distracted and start going and watching YouTube videos or Facebook or whatever, and then suddenly something happens just all of a sudden. Like for whatever reason, price is just moving sideways, and then bam, price jumps out of this channel that it's been in for many bars. Okay. So we see this sudden increase in momentum, and price becomes either overbought or oversold. In this particular instance, that's overbought. We're going to talk about the indicators on Saturday. I'll mention them briefly today, but we're going to talk more detail on the indicators on Saturday if you really need to know. Okay? So then the next bar opens, and this is where all the activity is taking place. We're reading every tick and every bar in order to look for certain conditions. And every time one of those conditions presents itself during this bar, an indicator is going to print. So we have right now 1, 2, 3, 4 indicators on that bar, and price is also slamming up into a line of resistance. 5 things that are telling us right there that something is about to change. Wait a minute. 1, 2, 3, 4, 5, 6. Forgot the mo meter. We'll tell you what that is on Saturday. Okay. It's these black bars. It goes from black to gray to light gray to white. That's our mo meter. Very important. All right. So momentum that started down here begins to increase. We'll start to see these bars start getting lighter as momentum increases. The lighter the bar gets, the more imminent exhaustion. We want to read, remember this, we're reading strength so we can anticipate weakness. Okay? Very important. That's the very first thing we do. We want to see strength so that we can anticipate weakness. Okay? Now, so momentum continues to increase. The speed tick, see this little arrow here? That's our speed tick. We'll tell you where that comes from on Saturday. Prints on the current bar, and it prints as soon as the orders being processed are processed at a particular rate to where it's highly unlikely us little retail traders are the ones doing the trading on this bar. It's most likely it's the market manipulators or the market makers. Okay. We have our pullback alert. Also prints during this bar. There's no back printing. The instant the condition for the reading inside this bar, we're looking at volume. The instant the volume is such that we're interested in that volume, we're going to print this indicator. Okay. And then price hits this line of resistance. Okay. We also have our ricochet, which is also an excellent indicator for knowing when price is likely to stop this major push and change directions. Okay, so we've got all of those indicators. Now, on the open of this bar, we get a rock star. This rock star is our trigger for this particular trade setup. It's our trigger to get into this trade. Those of you that are from the trade room, you're going, no, we could have gotten in this without a rock star, right? 5 ticks or less. We'll talk about that on Saturday, okay? You guys are the guys that need to just know how. That's great. Car keys and gasoline gets the job done. So we're going to enter the trade at the open of this bar or better, okay? So if this trade opens here, but maybe you weren't quite ready yet and the bar backs up, the price backs up to here, go ahead and take your entry here. That's a better price. We're going to short it here. And more times than not, that's what it ends up looking like. Okay? There you go. I just handed you a set of keys to your new trading system. That's it. That's all we do over and over and over again. There are some subtleties and nuances. There are some options that you can exercise for having you could either be a bit more aggressive, a bit more conservative, simply by tuning a couple of the rules. Okay? You have the ability to trade this system in many ways, and you'll see that in our trade room that there are people who trade it the way I trade it, and there's people that have been trading it for many, many years, and they have their own kind of little nuances that they have added, or maybe they've added it to a trading system they were already trading or something like that, which is really good for that too. So now I've given you the keys. All right, simple as that. That's it. That's our trade setup. There are no others. There's variations of that, but there's no completely different ones. So now it's time for some gasoline, okay? So there's a real simple qualifying process for our trade setups. It's something you can easily practice and then identify during the heat of the moment while you're trading. There's really, really simple. Other trading systems that I tried a long time ago were not procedural in the qualification of a trade. You know, you were always looking for 5 different somethings and different shades of gray. How overbought is it? How much volume is there? How much, is it outside the Keltner channel? I mean, there were so many things that you had to try to put together in your mind to pull the trigger on a trade that I was always just frozen. They call it paralysis by analysis, right? So I ended up either jumping in trades I shouldn't and then realizing I shouldn't have done that, or I wouldn't have gotten into trades I should have. So this was killing me. These shades of gray were killing me. Live charts aren't going to do you any good. KJ, I don't know why you would want to see live charts. They're not going to do you any good. Live charts, when they show you that in webinars, that's smoke and mirrors. Because I could show you live charts, and I can do that just as easily as anybody else. I can do that. That is how people that do webinars fool people like you. Okay? Live charts, if they're moving, that's one thing. If they're static, means nothing. Have you ever noticed that you can sit and watch a webinar where a guy's showing charts? We have videos, and that's on Saturday. We have live videos of live trades that you will see on Saturday. Okay? So here's the qualifying process. You don't need live charts for this. This is bam, bam, bam. All right? This is it. This is all you need to see. First thing is, if condition 1 does not exist, then you're going to sit and wait until it does. Once condition 1 exists, and by the way, if it doesn't exist, if it's not a yes, then it's a no. There's no shades of gray. There's no maybe. All right? So if condition 1 exists, yes. Now we're going to go, does condition 2 exist? If the answer is no, there's nothing to do. We wait. If it's yes, we go to condition 3. If condition 3 doesn't exist, there's nothing to do. No, we only develop for NinjaTrader. Now, we have a lot of people that use different order entry platforms, but still use the free NinjaTrader charting. And these can be used on the free version of NinjaTrader. Use NinjaTrader for charting, use TradingView for order entry. We have a lot of people that use different platforms for order entry. There's nothing in the world that says you have to use the same order entry and charting platform. I know a lot of us get kind of stuck in that thinking, but you absolutely do not. All right, so this goes on, and we're looking for these conditions. And if they don't exist, one after the other, after the other, after the other, then we just sit and wait. It's like waiting on a bus, right? Once we have one condition, next condition, next condition, next condition, then boom, we have a trade. All right? And that's all there is to it. All right? So what we're looking for, remember, price breaks out of a channel. If it doesn't break out of a channel, then we're just going to wait, right? But if it does, and then we have a strong move, then we're going to the next condition. Do we have a strong move? If it's no, then we just keep waiting. If we have a strong move, meaning if you look at these bars and you see the size of the next bars coming out of that channel, would you characterize that as a strong move? I absolutely would. I'm falling asleep back here, and suddenly your heart starts beating because of this strong move. Something is happening. Something caused this. You start to wonder, well, what caused that? I know what caused it. We'll talk about that on Saturday. So if you don't have a strong move, you're going to wait. If you do have a strong move, we're going to start looking for, remember, we're measuring strength to anticipate weakness. So we're going to look for our overbought indicator, right? That's the pink outline. We're looking for our speed tick. We're looking for major line of support or resistance, our pullback alert. Okay, all of these things are telling us that yes, we have strength, but weakness is setting in. Okay. So if we don't have a strong potential for exhaustion, I tell you, we get people in the trade room all the time entering trades that they shouldn't enter because they see indicators, but they bypass this first part and just start jumping in. You got to have it step by step, okay? So this bar is being manipulated. That's our speed tick. If there's signs of manipulation, we're going to start looking to see if we're going to slam into support and resistance. If there's no support and resistance there, we're going to look to see if maybe it qualifies for a setup that doesn't require support or resistance. If it doesn't, right back to waiting. If it does, then we're going to execute the trade right on the open of this bar or better. It's very common for this bar to open and then move up. And then we can get filled up here instead of down here. So we get a better fill. Very common. Occasionally, it also happens that this bar opens and drops. Guess what happens then? Nothing. You just wait. You miss the trade. And that's okay, because there's lots more coming. So, again, this is it. Then not all the condition existed, Jim. You're not going to have a strong push if it's still inside the channel. But that being said, if it's inside the channel and you have a line of resistance, that's a qualified trade. If the rock star is blue and you have resistance and you have this strong push, which is kind of hard to have both, but it happens occasionally, then you have a trade. Now, it's up to you to decide if you want to keep that in your rules or not. I think new people that haven't been trading our system very long, if they get the blue rock star, just don't trade it. Just only trade the gold ones. You guys will learn more about that on Saturday that don't know the difference between the blue and the gold. This is for you guys that just want to know how to trade our system and you just want to know when to push the button. Okay? So we have prices breaking out of a range. Breakout bar is larger than the previous bars. Very simple to see. This is the breakout bar. It's almost always bigger than these bars that are drifting in a channel. Then momentum starts to increase. This bar is very common, is bigger than the previous bars. Price becomes overbought. That's this pink outline. Orders are being processed faster than is typical for retail traders. Price action suggests that this is a climax bar inside this bar, which is why that prints. Now, when this bar opens, what we have found is that divergence has set in. Okay? Everybody know what divergence is. We're going to talk about that on Saturday for those people that need to know more about the trading system than just how to trade it. This is for you guys that just want to know how to trade it. Right now, this is your trigger bar. And again, this bar opened and jumped up to here, anywhere in here. Heck yeah, take that trade. I'm always thrilled to get a better fill. Thrilled. That's my favorite fills. And we get them a lot. So we're approaching a strong area of support and resistance. Okay? Coming out of a channel. If we're pushing hard, that's going to get my attention. Because now we've got this, it's starting to be something that we can qualify, okay? Now, three things have happened. If the momentum bars have started changing colors and still pushing straight up or straight down, this works in reverse, by the way. And then optionally, remember I said you can trade this within your own risk tolerance levels. If it gets overbought, that's also a good sign. What I do personally, and what a lot of our traders have adopted over time, is 5-tick target and 7-tick stop. But we manage our stops, so we don't always take full stops. In fact, today some of our traders took a -2 on a trade instead of a -7, because we have rules for managing our stops when the conditions that got us into the trade change. Another rule that sometimes all of this happens on this first bar of the breakout, which would be more about what you were talking about, Jim. You might get a 1-bar breakout like this and then a blue rock star, because it's really hasn't really moved a whole lot outside of the zone that this has been going in. So a lot of traders will exclude a 1-bar breakout and will only use a 2 or more bars on the breakout. Okay. Again, that's something you can add to your trading plan as it relates to your own personal risk profile. And you're the only one that can say what that is. If you like to take risky trades or higher risk trades, these aren't high risk trades, but you want to take a lot more trades, then you have to add more risk. If you want to take fewer trades, then you can be more conservative. Okay? You can. You absolutely can. I don't. I have an expectation that the pullback is going to be only a small amount. You realize that we're trading pullbacks, right? We only trade pullbacks whenever there's a trend and price starts moving hard. Our expectation is that price is going to come up and then it's going to retrace a bit while the profit people start taking profits. It's going to retrace a bit and then it's going to continue on up. Okay. So this is our sweet spot. You could certainly hope to get a bigger sweet spot, which is fine. You could do that and you could do the math and see if it's worth the effort. But over the years, I have found that I see steady growth and steady success in my career and in my trading account. I've seen steady growth when I just put away small profits over and over and over again. And I've watched that account grow when for 7 years, I couldn't ever get it to grow. My mission over those 7 years was to try to make back all the money I had lost. And that just got worse and worse and worse. So you could make a trade that say that I won't trade the black momentum bars. The longer you have momentum, the lighter the bars get. Well, Steve, that depends. The point of these is not a breakout, is such a short-lived thing. Okay. A breakout is going to keep moving. And again, Saturday, I'm going to tell you about momentum traders. Momentum traders set up these breakouts. Momentum traders, if you don't know what a momentum trader is, they will buy when price is high and sell when price is higher. Okay. They're not the buy low, sell high traders. They're the buy high, sell higher traders. They're going to get in and out very quickly. I'm going to describe this more on Saturday. Okay. So and the reason they do that is they're going to buy high. They're going to sell higher. Once they start selling, what happens? There becomes too many contracts for buyers on the market. And the next thing you know, price starts to go down because we're now too heavy on contracts that are available. So price starts to drop. But these guys, the momentum traders have already been filled. And you people that are trading breakouts are just starting to jump in as price starts to turn. Breakout traders, are there any here that have been breakout traders that for whatever reason it seems like as soon as you get in, that's when price turns around and goes the other way. This is what's happening. People are taking profits and they're trying to get you to jump into a breakout. Okay. So we're looking for we could potentially look for a different speed tick threshold. Instead of just the little white ones, we can trade the blue ones, which means that the speed of the orders going through is really fast, so fast that it might be something more than just a mechanical manipulation. It could be a news event or something. So we're looking for an open 5 ticks or less from this resistance. Okay. Now, that's for a rock star trade. For a naked rock star trade, which this one would qualify for, we don't even need the resistance. Okay. So we have one trade setup. This is all we do. One. Now, we have variations of this one trade setup, and we give those variations each a name. But every trade setup that we have, we're trading for a 5-tick target, a 7-tick stop. We're doing basically the same thing every single time. I could sit here and try to talk to you for 2 or 3 hours and explain this whole trading system to you, and have all of these different setups and all of these different charts to show you, and scroll around on static charts and show you how wonderful I am and how much money I made on, oh, look, I traded this and look what that did. And oh, look, I traded this and look what that. We don't do all that. It's one trade, and that's all you need, because what you're looking to do as a trader is become consistent. Okay. Freight trading. Freight trading is when I showed you that price had, on the open of this bar, price had backed up. Sometimes it backs way up before it turns around. That's freight trading. That's because price is trying to stop. It's trying to do what we know it's going to do, but sometimes it's got just a little bit of steam left in it before it turns over. Okay. We do see that often. So we do have a group of traders who want to be more conservative, don't need many trades. Their mission is consistency. So on a trade like this, they're probably not going to get in on this bar because it could just drop straight down. They're going to wait for that freight training and try to get filled somewhere up in here. And if it doesn't freight train, that's all right. Wasn't in their trade plan. Okay. So it's really all about your risk tolerance levels. I can't tell you what that is, but the beauty is, and I don't know of any other trading system where you can do this, we've given you all the tools and all the rules and everything. We tell you how these work and why they work, which is what we'll do Saturday. And then you can start trading it. You start trading it with us in the trade room and watch what we do and how we do it, and we'll talk about, what we do. And then over time, you can tune it to suit you and your risk tolerance. All right. So we use 5 ticks from support and resistance, but you might want to say 7 or 8 ticks is close enough to support a resistance. Those are the kind of things that you can work on yourself and test and see if that different criteria fits in your risk tolerance. Light blue is a go. Dark blue is a no-go. Okay. That's the simple answer to that. You could set a rule up that requires that dot be on this bar. Okay, the dot with the 2 on it that was in the last slide. Or also that ricochet. You may put a requirement on it that you need additional confluences. Okay. Or you could say, on this, we have 3 bars of momentum. You may set a rule that says I need 4 or 5 bars of momentum before I'm going to take this trade. Okay. Or that it's overbought, oversold. We call that OBOS. Or fewer than 5 ticks from support resistance. See, I'm just trying to tell you that there are ways to make this trading system your own. And a lot of people will start with what I do, because I've been doing this for 14, almost 15 years now. They start doing what I do and then start relaxing the rules a little bit or adding some rules. Okay. So all trades are entered with a 5-tick target and a 7-tick stop. We use a bracket order that we use, the ATM, Advanced Trade Management System. When we put our order on, our order gets filled, then we'll end up with a stop and a target already set. Okay? We never move our targets. We never trail our stops. Remember, the mission is to get that little sweet spot. We have no information that price is going to go more than just a few ticks before it goes back to the trend it was on. Okay? Our expectation, just like all trend traders, our expectation is the trend is going to continue. We're just really good at picking out where the trend stops for just a little bit. People start coming in, taking profits, and then the trend continues. So ideally, if you were putting on a trailing stop, your expectation would be that price was reversing. But we don't expect price to reverse. We expect it to continue on the trend after this small pullback. The small pullback is our strength. Okay? No, don't need to. It's up to you if you want to, but we don't need to. We just trade it as it is. It's not about money. Okay? We don't trade for money. Our job, we just have a job that we do every day. If you want to adjust for it, that's up to you. But we just do our job of executing our trade plan. Okay? So we never move our targets during the trade. We never hit the market button to get out of a trade or the close button. We're always going to manage the trade based on the current conditions of the trade setup, meaning that if something happens during the course of the trade that makes it such that, I wouldn't have gotten into this trade under these conditions, we're going to start to shorten our stop. Okay? And that's how we manage our trade. We never make stops bigger, only shorter. So again, I mentioned, Marshall, I think that was you today, right? You ended up at a -2 on something because you pulled your stop up instead of taking a full stop like I think I did. So you can manage your stops so you don't take a full stop if price doesn't continue on. Okay, so we only manage with our stops. And they're only shortened. Never, ever move further away, ever. Okay? Again, like I said, if they're managed for the conditions that got you into the trade, if those conditions change and you'd have not taken that trade under those conditions, time to start managing your stop. Or zero. I mean, what happens? No, that would assume, Tony, that's making the assumption that I'm going to sit on my hands and that I'm either price is going to hit my target or my stop. That's not what we do. So your assumption is bet 5 to win 5 is not actually true. Our stop may end up being -1, -2, -0, break even, plus one. Yeah, so we don't know. So you can always increase your stops and targets. You can always scale out of trades if you want to try that. We do have some people that they just hate taking losers. So if the target hits if price hits their target and the target doesn't fill, they'll have the ATM automatically bring their stop up to break even or plus one so that they don't turn a winner into a loser. You could certainly do that. That's an option for you. I don't trade that way, but I can't tell you it's the wrong way to do it for you. But I can give you advice on how to do those things if you choose to do them. Okay. All right. So again, I'm going to repeat this because I'm going to show you some information that I'm not sure you've all seen, but some of you maybe. And Marshall is here, and he has collected. He's been with us for a few years, and he started collecting information on our trades in our trade room. And for the first year, I didn't even know he was doing it. He just surprised me with it. Marshall is actually a reformed, I say reformed, retired budget analyst. So he's a numbers guy. And he has come up with our percentages from the trade room, and he keeps track of those for us. Okay. So this is 2020, 2021. We also have 2022. What happened to those? Hold on. Let me get you something here. There's something more current than this slide. I thought I had the right slide. So this is 2020, 2021, and 2022. So we're looking at over 4,000 trades. That's averaging, 250 trading days a year, 3 hours a day, 5.5 trades per session. And we trade from 9 a.m. to 12 noon Eastern time. Almost 2 trades an hour, 5 ticks per winning trade on average 5 ticks per losing trade, because we do manage some of our trades to, whatever. And this includes fees and commissions being removed. Okay, so we already removed, and what you're seeing here in the profits, we've removed fees and commissions already. All right. So that's the new information. If you want to look at this yourself, put that. There's a link in the chat to that page on our website. If you're watching this on video, look down in the description and it'll be down there. So I don't know. This is pretty good, I think. Average 79% win rate over 3 years, the last 3 years. 87,000 per contract traded. So not bad. That's something I was looking for a long time. No, this is one. This here, Rose. Oh, hold on. Where'd that go? This is single contract right here. Single contract traded. This is 5 contracts traded. Okay. Yeah. So that's why we created this chart, because the intention is you get good at trading 1 contract, and then you start trading 2, and then you start trading 3. And so you work your way up. So Saturday, there's the registration page for Saturday. If you're not already registered, you can copy that down and go register for Saturday. Yes, this is recorded, and I will send it out later tonight. You're welcome. So Saturday, we're going to be going a little bit more under the hood. Okay. Today, short and sweet, showed you the setups, same thing over and over again. I could show you on a fixed chart, static chart, same thing. Doesn't matter. We do it all the time over and over. It's easier to see if I put it on a slide than if I scroll around on charts. I know that's compelling, but it's also smoke and mirrors. If I ever go to a webinar and I see somebody doing that, my red flag goes up because they can convince you of all kinds of things. Have you ever noticed that? You watch those guys scroll around on static charts and suddenly when you're trading, whatever it was he was talking about, it's not that way at all, right? Have you ever noticed that? It's suddenly it doesn't work quite like he was describing in the webinar. And that's because it never will. All right, so I got a special offer for you guys. We got a 20% off offer. Go to our website and get you that link right here real quick. And go to our programs page, write down that URL. Well, there's a link. Again, if you're watching this on the video, look down in the description and we'll have it down there for you. Use our coupon code car keys and gasoline because that's what this was today. This was all about you just need car keys and gasoline. You don't need a long description of why everything does what it does or how it does or the logic behind it or anything. You just want to know what to read and when to pull the trigger. That's what I showed you today. It may have seemed overly simple, and it is. It's extremely simple. I taught you today everything you need to know to trade our system. Now you just need to fine tune it, right? Are there any other questions? Yeah, I was talking about that and I couldn't even think of it. Yeah, I know. None of that. None of that. Imagine that. Trading can be simple. Yep. And I've been doing it for going on 15 years now. And the system really hasn't changed in all those years. I may tune an indicator or create a new indicator to make what we do better. But the system is as good or better now than it was when I started doing it. Yeah, TJ's a pro trader. He actually trades for other people also. No Bollinger Bands, no wavy lines, no oscillators, no histograms. Now, that being said, they're in there, but you don't see them on your chart because you don't need them. There you go. Thank you, Rose. No multiple time frames. You know how I get this dumb stare from people when they go, what? No multiple time frames? How do you know what the bias is? Count you in. All right, Keith. Wait. Hey. Hey, I recognize you. You're one of the goons from the trade room. I don't even need a moving average. How is that? Right? Any questions? I mean, it's just, how about if you got questions, ask our traders that are here from the trade room. Ask them. I'm just the snake oil salesman. You can't trust me, but you can trust these guys. Yes. I don't know which ones do. They don't really share that with me, but I do know some of them do. Ninja Trader. This is Ninja Trade. I developed a lot of these indicators for other platforms, and they just couldn't keep up. Even TradeStation I did it for probably 2 or 3 years, and I finally had to just give up because they couldn't do what Ninja Trader can do. So I gave up, and I said, "Look, I'm just gonna." only 8 from this point forward. You shouldn't even be trading 7 anymore. I know a lot of people still trade 7, or few people, because they have an indicator that was coded by somebody who has vanished and can't and isn't going to be able to upgrade that indicator to NT8. I hear that occasionally, but you got to understand that Ninja's not going to support 7 forever. There is going to come a time they're going to turn it off. It's just not financially feasible to keep supporting it for such a small number of people. So we have the data downloader, just to give you an idea, Tony. We have the data downloader that you've seen online, the market replay data. And for many years, we collected data for NT7 and NT8 and NT8. And and I just kept collecting it and kept collecting it. And then I finally started to analyze what percentage of the data was being downloaded for NT8 versus NT7. And I come to figure out that less than 5% of the data that was being downloaded was for NT7. It was like 3.7% of the data of the users left trading NinjaTrader. About 3.7% were still using NT7. Everybody else has moved to NT8. So you got to understand that it's not financially feasible for NinjaTrader to support NT7 forever. So if you're still using NT7, you really got to make sure you don't get caught flat-footed when they decide to turn it off. Okay, that's just my 2 cents worth on that. They may go forever, but who does? Even Windows, they discontinue Windows stuff. So, okay. Well, thanks for coming, everybody. Enjoyed having you. I told you I was going to make this short and sweet today. Saturday will not be as short, or it'll be as sweet, but it won't be as short. A lot more information coming on Saturday. So hopefully we'll see you all then. Hopefully see you all in the trade room soon. If not, I'll see you Saturday. All right, everybody. Have a great rest of your day.